I'm Charlotte McLeod with investingnews.com, and here today with me is Jeff Clark, founder of the Gold Advisor. Thank you so much for being here. Great to have you.
It's great to be back with you again, Charlotte.
Really good to be speaking with you, and we are catching up. I couldn't believe it. Since January is the last time we spoke.
Yeah.
So lots to go over when it comes to gold and other developments. But one thing I noticed is we were talking about $3,000 gold at the beginning of the year. So, of course, we made it there and passed.
Yeah, it's amazing. Now we're all talking about $4,000 gold. I think it's very possible we get to $4,000 gold by the end of the year. We have another half year to go. I'm not necessarily saying we will. I'm just saying that that's very possible given all the risks and vulnerabilities in the system, and that any of those could rotate to the top of the list, so.
Of course, yeah. I think that 4,000 number is one that I'm hearing at this event being thrown around a little bit more. So we'll see. Nobody knows, of course, and anything could change it. But looking at gold price drivers, another thing I'm hearing from people are the factors driving gold are in place. And I'm wondering what you might put at the top of the list for gold price drivers.
That's a great question, because it could be any one of a number of things, right? When Trump got elected, nobody was thinking, it's going to be the tariffs that drive the gold price higher. Nobody was thinking that, and yet that became the number one dominating factor that pushed it higher with all the, uncertainty and all that it caused. So it could be any number of things. It could be we keep talking about the debt and deficits. We've all talked about this for years, and that's never really been the overriding driving factor, even though it's there in the background. What happens if something there becomes, major headlines, and that could drive the gold price? Some other geopolitical concern, a market concern, maybe something in the economy like a recession. I don't know if we're going to have a recession or not, but gold usually rises in a recession. It usually rises in a bear market for common stock. So there's so many different factors. What I'm focused on, to be honest with you, Charlotte, is I'm focused on making sure I'm ready for whatever that may be. And what that means for me is that making sure I own enough of physical gold to make a material difference or have a material impact and a significant hedge in place for myself, not just, the business and my portfolio, but me personally and the family, just having that in place so that you're protected, whatever it may be and whenever it may come.
Right. So it's not about exactly what it is or exactly when. You just need to be set up. I think that's a good takeaway for everyone.
Yeah, that's exactly how I view it, because you know what, Charlotte, I used to try to predict these things because people always ask, right? And I remember back in 2022 thinking, and I wrote this publicly saying, we're going into recession. Here it comes, be ready for it. And that's because the yield curve inverted at 30-year below the 10-year. And that was the number one best predictor of a recession for the past 6 times that we had a recession. When that inverted, we always had a recession. It was a great predictor. It inverted. Here we are. 3 years later, still no recession. So I really, I don't know if it's my age or just being in the market so long, but I stopped trying to predict things, and started just trying to be prepared for things. And in the meantime, living my life, but also trying to capitalize on, opportunities that I saw out there.
It makes a lot of sense. And I think when we live in times like this, where maybe the data is not telling you what it usually does, or maybe it's not quite correct, that makes a lot of sense.
That's right. Yes.
Yeah. Okay. So that makes a lot of sense from your perspective. One thing I've been thinking about when it comes to gold, maybe you can help me out with this. I think that, of course, in our space, everybody's feeling very bullish on gold, but we're starting to see big firms also come in with these pretty high gold prices. Like Goldman Sachs is looking at gold and saying, okay, we agree it's going higher. And I wonder, how do you feel about that? Does that mean gold is becoming less of a contrarian play? Is it becoming mainstream?
No. JP Morgan is one that's saying, $4,000 gold, here it comes. Meanwhile, you have Citibank saying, no, we're going to 2,500. Well, I'll take the JP Morgan side of that bet, but you don't have them all saying that, gold's going to the moon or anything like that. So I'm not too worried about that. And we haven't seen an all boats rise type of environment in the gold stocks.
Yeah.
So we have a bull market, but not all the stocks are participating. So until that happens, then you might want to look at, okay, it's getting a little overheated or something like that. We're not at that point right now.
Okay, that helps me a lot, I think. And so you started to mention the gold stocks. And in our previous conversations, we've gone over the disconnect between gold price and gold stocks. Are you still seeing that, or are you seeing more of them come up to be with the gold?
This is a good update because since that time, we've seen many stocks really start to perform very strongly. Many doubles and triples year to date. Many. But we also have a lot of stocks that are just going nowhere. They're completely dead in the water. They're not responding at all. And in my opinion, in my view, when I look at the whole market, it's the advanced stage explorer or the early stage developer that's not getting rewarded right now. I think they will get rewarded at some point, but as of right now, we have that bifurcation. What's getting the reward right now is discovery, and those that are gearing up or just entering production, they're getting lots of reward from the market. So we still have that going on. I think some of those stocks are still going to run, and I think the ones that are going to catch up are going to be those large assets, those advanced stage explorers that have a resource, in some cases a very big resource. I think they'll get love at some point.
I think that gives a great idea of where people can maybe start to focus for the future.
Yeah.
And the other thing I wanted to bring up to you is M&A activity. So we're starting to see some of that happen in the gold space as well as the silver space. Are you liking what you see? Is that possibly, should people maybe consider looking for takeover targets?
A takeover target is always going to be among your strongest candidates. So you're going to invest in them because they're strong anyway, not just because they're an M&A candidate. But I think M&A is going to continue. What I've been pleasantly surprised to see is just this year, since you and I talked last, was the big jump in financings and how big some of them gotten. The company that could raise $1 million a year ago is now raising $3 million. The company that raised $5 million a year ago can now raise $10 million. There's a lot of interest, from high net worth, institutions, funds, etc., that want to invest in these companies. I've been actively participating myself in some of those. I'm being very aggressive right now because I like what I'm seeing there. But M&A, I think, is going to pick up for two reasons. One, the producers are just printing cash right now. The jump in free cash flow and earnings from just a year ago, it is double and triple digit percentage gains, over a year ago. There's been some M&A in the space, but a lot of that is due to the gold price. Because the gold price is higher, they're doing well. At the same time, we have the producers, especially the seniors, have lowered their debt levels over the past years. So you have lots of cash coming in and lower debt. That makes it a ripe environment for M&A to really not just continue, to really even pick up.
Very interesting. Okay, so we'll be watching that. And I think that covers a number of things going on in the gold space. So let's move over and take a look at silver. Okay. I'm excited to ask you your thoughts on silver. It's very interesting right now. I think that people are looking and they're wondering, okay, the price is on the move. We've been waiting for silver to follow gold higher. Is this going to stick? Is it going to possibly go higher?
Yeah.
I know you're not so concerned about the price, but any thoughts?
You know what? As you and I talk, I think the gold-silver ratio is still like around 90. So it's still historically very high. So I think most of the audience knows, in the beginning stages of a bull market, gold leads, silver lags. Well, we haven't seen silver take over yet, but before the bull market is over, historically, silver catches up and passes gold in terms of a percentage return, which would mean that gold-silver ratio is going to fall. The long-term historical average is somewhere between 50 and 55, depending on how far back you go and when you measure it. So just there alone, just to get back to the average, silver's going to have to outperform. And of course, in 1980, it was 20. So who knows how low it goes, but I'm looking forward to the point where silver outperforms gold. And you know what? It may be starting pretty soon. We're in a little bit of a correction mode right now with gold and silver, but did you know not a lot of people know this, but the World Silver Institute survey just came out, and they said that there's been more investment into silver ETFs through June of this year, the first half of the year, than all of 2024.
Wow.
So already you're seeing a lot of demand pick up for silver investment vehicles, more than we saw all of last year. So that's a very good hint that at least a lot of investors out there believe that it's going to be silver's turn pretty soon.
That is encouraging. And just a quick note on the silver stocks. So you had outlined in the gold stocks where there might be opportunities. Is it similar for silver? Of course, it's a smaller universe. So
it is a smaller universe. So there's fewer opportunities. That's one reason I think these silver equities that have primary silver deposits they're just going to fly when this takes off. When silver breaks through resistance, if it goes to 50 again, and boy, if it breaks through 50, look out. So I think they're really going to fly. But yeah, the ones getting the reward are discoveries and those that are entering production. So I'm looking at undervalued silver opportunities right now because we own a lot of core silver companies. Some have moved, but the ones where you can still find a really great share price, a bargain as an investor, is those that haven't moved yet but have a real solid asset.
I think that makes a lot of sense. And I know I've got to get you back out on the show floor here at the Rural Symposium, but any final thoughts you would leave investors with, any other areas of focus for you?
Well, you have to be long. We're in a bull market, and the evidence of that is not just the gold price. Believe it or not, GDX has outperformed gold since the bull market began leap year day last year. And GDXJ, the junior miners index, has outperformed GDX. That's exactly what you want to see in a bull market, that we have confirmation that it's a bull market. It is safe to invest now. Don't chase the ones that are running, but look for value. And this is the time to do it. We have our time. It's here now, so you have to be an investor.
I think that's the perfect place to wrap up. So thank you so much for spending the time today. This was great.
Absolutely. We'll see you again soon.
We will. We'll catch up sooner than 6 months. Okay. All right. Once again, I'm Charlotte McLeod with investingnews.com, and this is Jeff Clark.